Hey guys, what's up? Alec back with the daily stock market, and look at that, not much going on Friday. We did have DraftKings up 5.9%, and we also had AMC down 25% after hours. So comment below, do you own AMC? Or are you staying away from that stock entirely? In this video, we're going to talk about AMC at $3.93 per share, down 77% on the year. And we're going to do an update on earnings as well, with another exciting week ahead of us. On Tuesday, we have the Home Depot reporting, ticker symbol SE, which is company C. We have PaySafe. Moving on to Wednesday before the open, we have Target, JD.com, TJ Maxx, Cisco, and then moving over to Thursday, we have Walmart. And Friday, we have John Deere and XPEV. So the main highlights of this week are going to be the Home Depot, ticker symbol HD, Target, ticker symbol TGT, and Walmart, ticker symbol WMT. But also keep an eye out for John Deere, XPEV, and JD.com. If you guys want to join my close friends list, by the way, message me on Instagram. It's super easy to join. You can see signals. We can see one member's up $2,400 in 1 day of trading just from one trade. Another member's up $838, 36% gain on the day. And feel free to join yourself so you can read through some of these positive testimonials yourself. If you want to see what I'm buying, when I'm buying, expiration date, strike prices on option trade, this is what this program specifically is for. So message me on Instagram if you want to follow along with exact trades I'm buying and when in real time. Other than that, let's dive into AMC stock first, and then we'll talk about Walmart versus Target. AMC at $3.93 per share could be a good time to start buying. Remember, the 5-year low is closer to $1.50, so I think under $2 per share would be the optimal place to buy and wait for another spike. Remember, this is a purely speculative play. Extremely risky stock that I don't always advise everyone, buying into, obviously. And if you are going to buy into the stock using around $50 to $100, maybe $200 worth of shares is risky enough. Don't go all out, because that's one of the riskiest things you could do. And make sure when you're dealing with a purely speculative play that you're not dealing with more than 5% of a normal position size. Okay, so keep that in mind. AMC, an extremely risky stock. We can, however, see that they are getting closer to profitability. When they reported their most recent earnings result, they reported breaking even at a $0.00 EPS. So they are trending closer to profitability, and it'll be interesting to see if they can get back to profitability, especially with all this hype around Barbenheimer, the movie Oppenheimer, and Barbie releasing at the same time, drawing lots of crowds in. Some headlines, we can see AMC shares fall 27% after court revised stocks conversion plan. Okay, so things to consider, things to think about, but overall, this is just an extremely risky play that's basically like gambling, so it's not in the best interest to be trading a stock like AMC. However, it could definitely spike up again, so be prepared for something like that to happen. However, there is no guarantees. Moving on with the video, we're going to jump into Walmart versus Target. So we're going to talk a lot more about fundamentals, the health of the company, balance sheets, income statements, and so on. So make sure you stay tuned for Walmart versus Target. Okay, so first up is Walmart, ticker symbol WMT at $161 per share. They're up around 5% in the past 3 months, and they're up 24% in the past year. So they've had a pretty good year, needless to say, going with the market trend with an upward trajectory overall. In the last 5 years, they're up around 78%. So not too good, not too bad in the last 5 years. We can see that the PE ratio is closer to 38, implying that they are overvalued a little bit compared to the stock market as a whole. But remember, they do have a moat around the company and a compatible, durable advantage as being Walmart. One of the biggest supercenter stores in the entire world with over 2 million employees, a dividend yield of 1.4, by the way. So it is an important earnings report because recession, remember all the fears going on in the past. Well, now those recession worries are fading. And when Walmart and Target report, we'll see how shoppers feel about that. The stockpile of savings accumulated during the pandemic is dwindling, and the Federal Reserve no longer thinks a recession is going to happen, but still expects an economic slowdown. MasterCard last month said consumer spending was resilient, while Visa said it was stable. This week, as analysts try to figure out what description best fits the mixed signal in this economy, we'll start to get that view from these retail stores where people are doing the spending, okay? So if Visa and MasterCard are saying that the spending is resilient, that's a good sign for something like Walmart earnings, because a lot of people are doing that credit card spending in something like Walmart or Target. It begins with home improvement chain Home Depot, which reports its quarterly results on Tuesday. Target and TJ Maxx report Wednesday. And then Walmart rounds it all out with reporting on Thursday. The quarterly financial figures arrive amid low unemployment, but continued consumer difficulties, and not all economists are convinced the economy is out of the woods just yet. Inflation, though easing in some spots, is still hurting consumers. Savings are running thin. Analysts expect a big back to school season with potential implications for the year-end holidays, but they're worried about the coming return of student loan payments, all right, which is something definitely to consider because that is happening and renewing once again. There was a long pause on student loan payments for everyone nationwide, if you're not aware, and that's being turned on and the pause is ending. And the degree of large retailers' exposure to this, retailers have tried to realign their inventories so they're stocked up with what people want, and they've fattened or propped up sales via price increases for essentials. But analysts have said they can't rely on that tactic forever. Consumers are still spending but are under financial pressure and have been adjusting how much they buy while also shifting from goods to services, which has been the story for the last few months, pretty much all year long. While jobs and wages gains have counterbalanced inflation, the stockpile of savings accumulation during the pandemic is dwindling and is no longer providing as much spending power as previously available. Now, we are expecting record levels of spending on back to school or back to college supplies. Also, retail stock could get a lift as the Fed's back off on raising interest rates. So that could be a good thing for the guidance. We remain constructive on the groups, with our overall view being that retail will outperform as the end of a rate tightening cycle comes into focus, the analyst noted on Wednesday. So real quick, let's look at the income statement and the health of the balance sheet on Walmart and Target and compare them against each other. We can see the net income is pulled up for Walmart right now, and you can see that they're very inconsistent with their net income the past few years. However, it has grown if you are taking into consideration from 2019 to 2023. However, if you're looking from 2021 to 2023, we can see a decline happening. And if you're looking from 2020 to 2023, then we can see an even bigger decline happening. So that is a red flag for Walmart. If we go to the quarterly, we can see that also there was a negative income, net income quarter on Q3 2023, which is a huge red flag. And we can see that the net income quarter to quarter is just bouncing around all over the place. So we want to see a more consistent report from Walmart. Total revenue seems very consistent. So we pretty much know what we're going to get when it comes to total revenue. However, net income could be the surprise when it comes to Walmart. All right. Also, Revenue's not growing that much. We have 600 billion in total revenue for Walmart. Make sure you write that down because we're going to compare it against Target here in a second. And we have 11.29 billion in net income for Walmart. Now, if we go to the balance sheet, we can see the debt to asset ratio is 65%, and that breaks down to 240 billion in assets and 159 billion in liabilities. So not the best, but not the worst balance sheet. Now we have Target's income statement pulled up, and as you can see, they're even more inconsistent. However, it looks like they've been growing their net income the last 4 quarters in a row, which is a great thing to see. If we pull out to an annual chart, we can see from 2019 to 2022, they grew their net income just fine from 2.8 billion to 6.9 billion, which was a huge increase. Lots of people were shopping at Target. And then in 2023, this year, we've seen a huge slowdown. And really, the quarterly is not looking too good because in Q2 2023, we saw one of their smallest quarters for net income. These companies could beat on earnings and have a good earnings report, but the overall health of the company is not looking the best right now. Total revenues looking pretty stagnant. Also, just like Walmart, we have 109 billion on total revenue for Target, and we have 2.7 billion on net income for Target. So you can see that's a big difference there. And from all that revenue, they're only catching around 5 to 2% of the total revenue into their net income. That is for Target. So lots of scary things going on with Target. We can also see that the balance sheet has 78% debt to asset ratio. So it's getting to that 80% debt to asset ratio, which is a red flag for investors and something to be worried about. We can see that there's 53 billion in assets, but they also have 42 billion in liabilities. So it's really not the best situation they have going on with their balance sheet and their income statement, specifically their net income. And when you look at a 1-year chart of Walmart versus Target, you can really see the difference. We can see Walmart is up 24% in the past year and Target is down 23% in the past year. Okay, so Target has not been playing out good. Walmart could crush Target. And for all we know, Target could be extinct totally. So they're a huge risk, but they also could have a huge bounce back because there's people who shop at Walmart and then there's people who shop at Target. You know, if you know, you know. It's just a kind of a different demographic of people that go to Target. So they do have a competitive, durable advantage. Obviously not like Walmart, but I think Target has its place and will always be there. We just have to watch that balance sheet. If that balance sheet creeps up to 80%, 90%, 100%, then I would suggest getting my money out of Target and pulling out of Target. But it seems like Target is a good deal right now. Overall, they're down 48% from all-time highs of $261 per share. So if you shop at Target, if you believe in Target, it could be a good investment in your portfolio. Walmart, I'm waiting for a pullback. I want to buy under $150 per share. However, dollar cost averaging into something like Walmart, I think will be a good idea. And I think Walmart will be around for the next 5, 10, even 20 years as a dominant player, growing their revenues consistently, even if it's only a little bit year over year, growing their net income consistently as well. So remember, if you want to see exactly what I'm buying, when I'm buying, if you're an options trader and you want to see strike prices and expiration dates with over 6 signals per week with my Premier program, my premium plan, then message me at the Daily Stock Market. I also have a plan that gives you 1 option trade a week if you're just a beginner and you want to just start out. High conviction option trades, high success option trades if you want to be a master at the stock market. With now over thousands of positive testimonials, go read them for yourself. Just click on success number 9 or success number 8 and read through some of the most recent positive testimonials. You can see thousands of people have had success now, so I want you to be the next success story. Just message me here at the Daily Stock Market and I'll shoot you over all the information needed. Thank you guys one last time for all the love and support you show on every single video. Just smash the thumbs up on this video and share it with a friend if you think the information in this video was useful. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.